What is up, YouTube? So in this video, I want to show you guys how to make money trading oil. Oil can make you a lot of money if you know how to play it right. Now, my alert went off. So I might be entering oil for a trade right now. Just to break down oil, obviously we all know oil is is a commodity. Right now, if you're watching this video in this current time frame, oil prices have gone pretty up. It's reached highs that it hasn't seen since about 2010 or so. It's been a few years since gas has been this high, also, and they're predicting to go higher. So oil has been trickling up for the past couple of months or so. But anyway, when trying to figure out where the price of oil is going to go, you really want to focus on two things. For me, I found out that oil is fundamental, and so the news heavily affects the price of oil. So, in one given day, oil can, go up $1 or $2 based off of just the news. So if the news says, okay, there's, we're in a shortage of oil or whatever, demand for oil is higher, price goes up, okay, and then they say, okay, we actually have a good amount of barrels in storage, oil goes down. It just jumps like that. So you want to pay attention to the news for oil. And then beyond that, what I'm really looking at for oil is just honestly, you're setting support and resistance lines and kind of just seeing the overall trend of the market. So even for right here, right now, oil is in a ranging market, and you can do very well just scalping in a ranging market. So riding it up, imagine so you get in right here. You ride oil from here on up to here, and then you could ride it back down, then ride it back up. Also in this time frame, it was ranging. All this right here, ranging markets are honestly opportunity because they're pretty simple to trade if it's truly a ranging market. And why is that? That is because that once it hits supports, it normally is going to bounce, and hits resistance, it drops. And then you could, if this is the ranging market it's in, you could trade it until it breaks structure. So let's look up here. When oil was ranging between $83.86 on up to $84.28, it was ranging, and then it had a move down, right? And if you would have caught the break of structure, you could have caught this nice ride down to here, and then we have a little bounce up, little slight recovery, back down. But that's ranging market, so there's no trend right now on the 15-minute time frame. Now, if we go look at it from let's look at the 4-hour. On the 4-hour, we can clearly see a uptrend here, and let's look at actually the daily. We'll see even more of an uptrend. The daily shows us a very clear uptrend. So literally back in August, gas was at $61.75 a barrel. Here we are now in November 2nd, and gas has been trading around $84, $85 as a high. So let's go back down to the 15-minute, because right now this is just a scalping strategy. I want to explain to you guys, when you're counting pips for oil, you got to know exactly, excuse me, I'm dying apparently. If you use the forecast thing, it's not going to give you an accurate number. So let's say we caught it up here for a sell, right? Now we see it just says $1.08. So $1.08, and it seems like you would think it's $1.08 pips, but it's actually just calculating the amount of movement. It's just $1.08 different in price. What you do is for oil though, is you move the decimal point 2. So instead of instead of $1.08, it's actually 108 pips. That's how it's counted. So with oil, you can see how that can add up very quickly. So you're getting paid on the penny. So if it goes from 24 cents to 25 cents, that's a pip. So whatever, depending on whatever lot size you're trading, if you're trading a standard lot size, then 108 pips comes out to $1,080. So even with these ranging markets, even if it moves 50 cents, that's not 50 cents, it's 50 pips. And so with that being said, with 50 pips, you can literally, depending on your lot size, if you're trading, for me, a lot of times I could trade a $50 lot size, a $3 lot size, which is a 0.3 lot size. With oil, if in a ranging market, if it's an uptrend or a downtrend, I'm catching an actual trend and not just a ranging market. I put in multiple positions. I'm a little bit more aggressive with it. But even right now, I may enter in for another buy. I'm waiting for oil to kind of push down a little bit more for this ranging market to catch a little bit bounce. And you don't have to catch a huge bounce. Remember that. if you're trading, depending on your goal. So if you want to make $100 a day with this, you literally only need to, let's see, for example, let's go to $100 divided by 3. So if you can catch a 33-cent movement a day, then you make $100 a day with a 0.3 lot size, which is a $3 per pip movement. And that's just 33 cents. So oil constantly is moving 33 cents in a day, $1 in a day. It's pretty normal. So if you can identify a ranging market, then you can make money. And so the important thing is with the ranging market is your entries, because once you identify a ranging market, like, you want to catch it when it hits support. You want to catch it when it hits resistance, and for this also you want to have tight stop losses, because if you're trading a ranging market and it's been ranging for a while, eventually it's going to break up structure. So if you think it's hitting support and you think, okay, it's about to bounce, and you don't have a stop loss in, or one that's kind of far, you could lose a lot of money, because if you're thinking that's going to hit support and bounce, and that's actually the point where it wants to break structure and keeps going down or keeps going up, now you're going to lose a lot of money. So with this specific strategy, you want to, 1, fundamentals. So look at the news, understand the news. What is the news saying about it? 2, your technical analysis is pretty basic. You're looking for, a ranging market. Clearly where you can identify a clear support and resistance. And what does that mean? You can find an area where it's touched multiple times. Boom, boom, boom. And then right here, it broke structure. Now, when looking at break of structure, let's look at this. Let's look at the candlestick. So 1, these smaller candlesticks just represent less activity in the market. And then so up here, boom, down, boom, down. So let's look at a couple things. We had a very bullish candle down. This one, and it pushed down even further, pushed up. So sorry guys. Anyway, coughing. So it was a very bullish move down, tried to push down further, but then it quite didn't break there, tried to recover, ended here. So this candle was still, I would say a bearish engulfing, but this one came before this one. So engulfing normally is when the candle is the one beside it. So this one is not an engulfing because it didn't engulf this whole candle. But this one is a bearish move down, right? Try to push down further, but then look at the other candlesticks. You can see how the candlestick started to change. It got a little bit more bearish, and then boom, it finally broke structure and kept pushing down. So once again, once you found that, you want to make your entries at the support and at the resistance, just so you have the most upside and the most chance of making the most profit. Because if you just try to trade in a range market, instead of getting in right here, you get in like right here, your upside isn't that high. What does that mean about upside? Is the risk to reward ratio is not good enough to enter for that trade. And obviously we know trading is about risk management. You can lose a lot of money very quickly. But if you get in here, even if I take a position right here and I see it's touched this multiple times, I'm more confident to take a little bit higher of a lot size or a little bit higher risk if I have a tight stop loss, right? So my stop loss, if I get it in support, is going to be only a few pips under. That way it knocks me out, and then, I can watch the market, see what it wants to do next. And, if the market tanks, I don't really care. I'm cool with the tight stop loss, because if the market tanks out and goes down, then now I can just catch a better entry, or I can, if I identify that it's actually it's a break of structure, I can ride it down, like I said, or ride it up. And on that, you'll make more money than obviously in a ranging market. So guys, that is it for this video. Just want to put you guys onto oil, and so you understand how pips are calculated. So remember, I'll give you guys another example. So this one is double digits right here. So $1 is going to be 108. And if this was a $10 movement, then that would be actually 1,000 pips. And if it's less than that, if it's 79, we take the decimal point, still move it 2. So now we are at 79 pips instead of 79 cents. Hopefully you guys learned something new in this video. Don't forget to like, comment, and subscribe. See you in the next video. Don't forget to make some money trading oil. Peace out.